The technical foundation of LITKEY is built on a hybrid consensus mechanism combining delegated proof of stake DOPS and proof of authority POA. This structure allows for fast transaction times, low gas fees, and high scalability, which are essential for a system handling millions of identity verifications per second. One standout feature is LIT protocol, which uses on-chain key tokens to authenticate users securely. Each wallet generates a digital identity hash that can be verified without exposing any private data, a major breakthrough for Web3 security. Developers can integrate LITKEY APIs into existing dApps, enabling frictionless sign-ins, NFT ownership proofs, or even gated access to exclusive communities. The white paper also mentions zero-knowledge key verification (ZK-KV), a unique use of zero-knowledge proofs that lets users prove their identity without revealing it. That's a big win for privacy. So technically, LITKEY isn't just another meme coin, it's trying to solve a real, long-term problem in the decentralized space: trustless authentication. Tokenomics follow the money. Now let's get into the numbers, because tokenomics often decide whether a coin pumps or dumps. The LITKEY token LITK has a total supply of 1 billion tokens. Here's how they're distributed. 40% goes to community rewards and staking to Inceptishi's early users and validators, 20% to the development fund for ecosystem growth, 15% to the team and advisors vested over 3 years, 15% to strategic partnerships and exchanges, and 10% to liquidity and treasury reserves. The token utility is tied to network participation. Holders can stake LITK to earn rewards, use it to verify digital access rights, and pay for network authentication services. Now, this model sounds good on paper, but here's the catch: token unlocks. Over the next 18 months, a significant portion of LITK will gradually enter circulation. If user adoption doesn't keep up, it could lead to sell pressure, pushing prices downward even if the project itself is solid. So, while the tokenomics are designed for growth, short-term investors need to watch out for supply shocks. Team and development activity. The LITKEY team claims to be a mix of blockchain engineers, cybercustodian experts, and ex-developers from projects like Chainlink, Near Protocol, and Arvway. While several core team members remain semi-anonymous, as is common in crypto, the CTO, known as Daniel R. Lee, has verified experience in cryptographic infrastructure and Web3 app design. GitHub commits show consistent development, with major updates to the SDK and mobile wallet integration rolling out through Cree and Cower20 with it. Community engagement on Discord and Telegram is also growing, which is a healthy sign. However, the marketing still feels underfunded compared to other top-tier projects, meaning the coin may not yet have mainstream visibility. Still, the team's steady delivery of milestones builds confidence that LITKEY is a real, working product, not just vaporware. Market performance and price action. Let's analyze the price side. LITKEY launched around 0.0 in early 20 with it. After initial exchange listings and influencer coverage, it spiked to 0.36, a 350% jump within a few weeks. However, it quickly retraced to the 0.15 range, consolidating for several months. This price behavior indicates an early pump, likely driven by hype, followed by a healthy correction as speculative traders exited. But here's the key takeaway: the token has held its higher lows since mid-year, signaling potential accumulation rather than a full collapse. If volume and staking participation increase in COIN 2026, analysts expect a retest of the 0.5 resistance zone, which could confirm the next bullish leg. But if development stalls or broader market sentiment weakens, LITKEY could easily revisit the 0.10 support level. So technically, LITKEY sits at a crossroads. It can either break out or fade away, depending on execution. Community sentiment: pump or dump? Community sentiment plays a huge role in any crypto project's success. On social platforms, LITKEY's fanbase is calling it a hidden gem, highlighting its real-world utility beyond speculation. But skeptics argue that unless major dApps or metaverse platforms adopt its protocol, it might remain niche, valuable, but not viral. On Reddit's Rickcurrency, one thread gained traction stating, LITKEY might be the first true decentralized identity layer that works. Meanwhile, others pointed out that identity projects often struggle to monetize since users expect privacy for free. So, while the community is cautiously optimistic, the overall tone is mixed, bullish for the tech, neutral on the token price. Strategic partnerships and use cases. Here's where things get interesting. LITKEY has announced pilot integrations with two upcoming metaverse ecosystems, Metaverse and Gridplay, allowing players to use LITKEY identities to access NFTs and digital assets securely. It's also in early talks with DeFi platforms for identity-verified staking, which could reduce fraud and Sybil attacks. In 2025's Web3 landscape, digital identity is a trillion-dollar opportunity. If LITKEY can secure even a small portion of that market, especially through partnerships with established blockchain ecosystems like Polygon, Avalanche, or Solana, it could see massive upside. However, without these partnerships turning into real traffic and daily users, the project risks becoming another cool idea with limited traction. Risks and red flags. No analysis is complete without addressing risks. Here are the top red flags to watch for in LITKEY. First, limited exchange listings, as it's currently available only on mid-tier exchanges like MEXC and Bitmart. Second, low liquidity, which makes it vulnerable to manipulation and pump and dump cycles. Third, a high token unlock schedule, meaning upcoming releases may increase circulating supply significantly. Fourth, an unproven revenue model, since adoption depends on developers integrating the SDK and users paying transaction fees. Finally, competition, because identity and key management is a crowded space with players like WorldCoin, Civic, and Polygon ID already ahead. Still, none of these are fatal flaws, they're typical growing pains of an early-stage project. Analyst outlook: short-term versus long-term. In the short term, LITKEY's price will likely depend on market momentum and exchange listings. If it gets listed on a major platform like Binance or Coinbase, expect a quick euphoric pump. But if listings delay and liquidity stays thin, traders may lose interest temporarily. In the long term, if LITKEY succeeds in building a sustainable decentralized authentication network, its value could rise exponentially, not from hype, but real-world demand. Imagine every decentralized app using LITKEY for user logins. Each transaction would burn or lock small amounts of LITK tokens, creating long-term deflationary pressure. So fundamentally, the project's use case is strong, but execution and adoption remain the deciding factors. Comparison with similar projects. Let's briefly compare LITKEY to other projects in the identity space. WorldCoin focuses on biometric identity with a $1.2 billion market cap but faces privacy concerns. Civic focuses on KYC verification with a $120 million market cap. Polygon ID is gaining traction with $300 million and strong tech backing. LITKEY, on the other hand, focuses on key management and Web3 access with a smaller $40 million market cap but promising technology and early-stage growth potential. This shows that while LITKEY is still small, it sits in a high-value niche with strong upside if adoption follows. Market catalysts that could trigger a pump. There are several key events that could drive a LITKEY pump in the near future. A major exchange listing on Binance or KuCoin would boost liquidity and visibility. Partnership announcements, especially with Metaverse or Web3 infrastructure platforms, would attract new users. The launch of staking 2.0 with higher rewards could attract holders and reduce selling pressure. Increased media exposure through influencers or mainstream coverage could also push the price upward. And finally, a continued bullish Bitcoin cycle would lift mid-cap altcoins like LITKEY across the board. Any combination of these could easily double or triple the token's price in a short window. Scenarios that could cause a dump. On the other hand, there are realistic triggers for a dump. Delayed roadmap delivery could shake investor confidence. Excess token unlocks might flood the market with supply. Low user adoption would limit utility. Regulatory pressure could arise, especially for identity-related tokens. And of course, whale manipulation is always a risk in low-liquidity coins. These factors could push prices down 30% in a bearish environment, so managing risk is key. Final verdict: pump or dump? After analyzing everything, the tech, tokenomics, team, price action, and sentiment, here's the verdict. LITKEY is a high-potential, medium-risk project. It's not a guaranteed moonshot, but it's not a rug pull either. If the team continues to deliver on product development and secures key partnerships in 2026, this coin could evolve into one of the leading decentralized access protocols in Web3. In short, pump potential is strong if adoption picks up and exchanges list it. Dump risk is medium due to token unlocks and low liquidity, and the long-term outlook is promising if it becomes the go-to identity layer for dApps. So if you're an investor, LITKEY fits best as a small cap, high upside hold, something you keep a close eye on, not a large portfolio position yet.